All right, so let's talk a little bit about the impact of costs on pricing. Remember, we said this is one of the 4 important pieces of information to identify. Okay, so we have 2 kinds of costs that we tend to talk about from an accounting perspective in marketing. Variable costs, those are either the cost of goods sold or the cost per unit, and fixed costs. So let's talk a little bit about variable costs. Well, what's the impact on pricing for variable costs? Well, variable costs affect the price at which profits are maximized, and they impact the profits at any given price. So variable costs affect both the price at which profits are maximized and the profits at that price. Fixed costs, on the other hand, do not impact the price at which profits are maximized, but they do impact the profits at any given price. So variable costs affect the price at which profits are maximized. So as variable costs go up or down, the price at which profits are maximized goes up and down. But fixed costs don't impact profits that way. Fixed costs only impact the profits at any given price. And of course, remember that in the long run, no costs are fixed. We can always eliminate all fixed costs and turn them into variable costs in the long run. So are fixed costs or variable costs more important for profit maximization? The answer is, of course, they're both important, but variable costs actually influence the price at which profits are maximized. Another thing that you need to understand, of course, if you're looking at your costs, is to understand how your costs compare to the competition's costs. Because if your costs are higher than the competition, it limits some of your competitive moves going forward. Once again, the company with the lowest costs is the company that can charge the lowest price in a price war. All right, so a couple of quick things to remember again about costs. Costs are not important for revenue maximization. That is, you don't have to estimate costs to determine the price at which revenues are maximized, because revenues do not use costs in their formula. It's simply price times units sold. Variable costs create a floor for market penetration and also a floor for the price at which you can operate and still make money. So the company with the lowest variable cost is obviously the company that has the most flexibility if a price war were to start. While we talk about fixed costs and variable costs, sometimes pricing experts talk about avoidable versus unavoidable costs. An example of this would be, let's assume that you own a bar and you're trying to decide whether or not to have a drink special on Friday afternoons. If you have a drink special and the crowds increase, you have to add an additional bartender. Is that a fixed cost or a variable cost? Well, in terms of accounting terms, since the bartender's cost is what we would call a fixed cost, because it doesn't vary with the number of drinks sold. If you schedule an extra bartender, you simply pay them. But in terms of trying to decide whether or not that would be a good idea to put in a drink special on Friday afternoon, you need to understand that since if we didn't put the special in, the bartender we wouldn't have to add the additional bartender. They are what's called a fixed cost, but they are also an avoidable cost and need to be considered in the pricing decisions. Strategy implication for businesses with high fixed costs. If you have higher fixed costs, you have a higher break-even point, which means then every single month you have to work very hard to sell enough goods to break even. So businesses that have high fixed costs are always worried about breaking even every month and not losing money. Strategy implications for business with high variable costs. Well, if I have high variable costs, then it means I have to be able to continue to charge a high price so that I can maintain my margins. So the strategy implication for business with high variable costs, be able to make sure that they do not get caught in a price war and that they do not have to discount prices to get sales, because every discounted dollar in price really hurts their profits. Okay. Once again, understand the impact of costs on profits. Variable costs affect both profits at which the price at which profits are maximized and those profits. Fixed costs simply impact the amount of profit at any given point. Yes, costs are important.